All right, test, test, test. Hey, I'm going to get started here in just a second. Let me just make sure that I can be heard. All right, test, test, test. Hey, I'm going to get started here in just a second. Okay. I'm going to here we go. Hello, everybody. How's it going? This is self-storage, a live stream that I do. Try it every Wednesday. Well, not every Wednesday. This is when I have time, I can do this. And so recently, I've been trying to get back into doing this on Wednesday, where I can talk about self-storage in sort of a small facet and try to explain to people, about self-storage investing and the reasons why it's so awesome to do. So why don't I just get into it? Okay. So self-storage itself is it's an easy class to kind of understand, especially if you're coming from a residential or multifamily background. But there's always a lot of questions I got about running it successfully. And so during these sessions, I generally try to answer a lot of these questions. So yeah, let's get into it. So my name is Powell Chi. I'm from Radiant Storage. I'm a managing partner of Radiant Storage. We're the premier self-storage investing team out there and looking to just help out people who are interested in investing and looking to gain real world experience in what self-storage. So today, I got a series of questions. I got a question earlier in the week, and I thought, you know what, this is going to be a great topic. So, the question this week is going to be around exit strategies. But before we get into that, I'd love for you guys who are here, give me a like, give me a thumbs up. And if you see this little scrolling thing right here where it says /group dash comments, I think if you type that in to the comments, it should tell you how to get into here. And I'll be able to see who you are when you ask a question. So love to make this a little interactive. We won't be on here very long, but I just wanted to, talk to you and not just be here just talking to, basically like myself, right? All right, so let's get into those burning questions. Let's do it. All right, so every week I get a ton of these questions, and this week, like I said, it's really more around exit strategies. So I think this is a great topic to have and just have a discussion about. So exit strategies. Now we're talking about what are the strategies that we have in place, and I'm going to talk specifically for us because everybody has their own exit strategy. But this is for us at Radiant Storage. What do we have in place for our 16 facilities? So now we have 16 facilities. So what are we looking for? So and not just like, okay, this is what we're going to do in the beginning, but once we get towards the end and we feel like, hey, we're about to either, what do we want to do when we go towards this exit? Now, there could be multiple different things that we can look at, and I'll go over a few of them right now. So, let's talk about the basic one, right? One of the first ones, and I'm going to kind of rank these in sort of an order of, I guess, maybe difficulty, but also an order of from easy to difficult, but also like I would say more likely to less likely. But it's also kind of like lower returns to higher returns. All right. So let me just talk about the first one. So the first strategy in terms of exit strategies is an 5-year sale. Now this is what is typically shown on a lot of multifamily deals is really a pro forma that shows during these 5 years, what will we do during this time? And once we exit in 5 years, what will be the total returns that you have, right? So the plan is to sell in 5 years. Now, when we do this, we show this on our models. We show our pro forma is a 5-year sale. Okay. And this is basically our plan B or even a plan C for us when it comes to our exit strategies. But we show this to our investors just so that we can say, if you're comfortable with this, we're going to try to do better. All right. But on our pro forma, 5-year sale, there will be no refinance in there. It's just a straight 5-year sale. So we're not kind of juicing the returns with a refi in there at all. And we do this also because it's easy to compare, right? When you're looking at deals across the board, you're trying to figure out like what deals have good returns and what are the good returns and how do you compare a self-storage deal to a multifamily deal to a short-term rental to industrial to I don't know, assisted living, all different types of things, right? Is really kind of showing a 5-year sale and what is the multiple, the equity multiple at that 5 years. Okay. Now for us, this is plan C. All right. And it's a good plan, and it's comfortable for most real estate investors, but we think we can do better. So let me move on to what is plan B. All right. So plan B for us. All right. Plan B is what it's kind of like the holy grail of real estate investing. I mean, this is infinite returns. Now, people talk about infinite returns. What does infinite returns mean in real estate investing? So whenever what you're hoping to get in these kind of scenarios is that you put in some money into a deal, and eventually you get all your money back, right? So you have no more money in the deal, but the deal is still paying you, right? So your returns become infinite at that point because you have no more money at risk inside of the deal, and you're actually still getting paid consistently. And eventually, if you decide to sell down the road, you actually have no money in the deal. So it's a great thing because you can actually put money into one deal, and if you get it to that point where it returns are infinite and it's returned 100% of your capital, and it's still paying you cash flow, and plus it's appreciating, and down the road can sell for a good price. You can also place that money into a second deal, and so your money can be working like in two places at one time. And then, if you can do it fast enough, you can do it, several different deals with the same capital, right? You haven't had to invest more capital. It's the same capital that you've invested into multiple deals, right? So that is why it's sort of the holy grail, the home run of real estate investing. And that's kind of across the board of all different types of real estate investing. Now for us, we feel like in all of our self-storage deals, we've been able to sort of comfortably project that we could probably hit our numbers and do this refi and return 100% of our investors' capital in about a 3 to 5 year period is what we're thinking. So this is what we plan to do in our deals, and we say that it'll take that 3 to 5 years, but if we can return 100% of our investors' capital, that's great. We've now hit infinite returns, and they can put that money. Hey, it's great if they want to invest it with us again. That's awesome. We would love that. But if they don't and they want to invest it in something else, that's their prerogative to do what they would want to do. But this is a more powerful play than just a 5-year sale. So like if you're a 5-year sale, typically you're going to end up at somewhere around 2 times equity multiple. But if you're able to do this and you're able to do it in that maybe 3 to 4 years, and kind of revolve that capital, you can. This is much more of a powerful technique. One second here. Sorry. When you're live, sometimes you just gotta cough. Sorry. But I'm fighting this throat thing, and that's killing me right now. So, okay. Hopefully you get the idea, but this is kind of like plan B for us, but it's another exit strategy that is a more powerful exit strategy than just a 5-year sale. All right. And that's something that we aim for, but we don't really model it on our pro formas because it's very difficult. You don't really know what the refi loan will be like. It's hard to judge what the returns will be like after you do the refi and things like that. Okay. One second again. Sorry. Okay. A little rough today. Sorry. Right. Let's move on to number 3. All right. So what is the third exit strategy that we have in place? Now, this is something that has come up of recent as you start to create a larger portfolio in self-storage, and I guess in other asset classes too. I mean, it's not just unique to self-storage, but in our case, in our self-storage portfolio, now that it's growing, and we got to 16 properties right now, and who knows, we could get to whatever we get to, 30, 50, I don't know, 100, whatever we get to. But in this 2.5 years, where we've got to 16, it's now becoming a lot more possibility of what's called a roll up. Okay, so this is called a roll up, where basically we're kind of gathering a lot of the same asset classes. We're improving what they're doing. We're improving the NOI. We're stabilizing a lot of these self storage facilities, and there's a possibility that we can roll this into a larger portfolio and then sell this to a bigger buyer. Right now, this bigger buyer, you kind of say like, well, how does that work? Now, I'll tell you, again, we haven't done it, but this is becoming a lot more possibility in that now some groups are starting to you reach out to us with feelers of hey, are you as interested in selling your whole portfolio, right? Not just one property. But there are bigger buyers out there who want to buy, they want to get involved with self storage, but they don't want to buy a one off property. They don't want to buy one for $10 million and then buy another one and then, take a long time to grow their portfolio. They would rather allocate a lot of capital and buy 20 storage facilities, 50 storage facilities, 100. They buy large, portfolios. So you can see every once in a while some of the big REITs out there, some of the big private equity companies, big hedge funds, they will buy, places that like 100 facilities, right, at one time. They would rather have that type of transaction, and they will pay a premium for that type of transaction. The multiple that they will pay for is a lot higher than you would get if you just sell individually. So as you can grow your portfolio, you become a lot more attractive to these buyers who want to buy and add a significant portion to their current portfolio. And this is becoming a lot more of a reality for us, where we people are talking to us about, hey, would you guys be interested in selling the whole thing? And what's the timing? And so we're just kind of early stages of having these conversations, but this is a great thing for, I think, for us as well as for our investors, really, is that if they're willing to pay a better multiple than we would get by selling the individual properties, then we can look at packaging the whole thing together. And so that is our third exit strategy, which is called a roll up. All right. And those are the three that we have really kind of explored in place. So yes, we can sell. Let me just recap really. The three types of exit strategies that we have in place are really, first one is a 5-year sale. Okay. Just 0 to 5 years, sell the property. All right. Pretty straightforward, pretty standard, pretty basic. The second one is an infinite returns model. All right. So an infinite returns model where you take the property and you improve the value so much that you're able to refinance this property in, say, that 3, 4, 5-year period, and then return 100% of your investor's capital, keep the property, and in our case, we're keeping it for another 5-year term, and we're deciding at that end of that 5 years what to do with that property again. Do we want to sell it at that point? Do we want to refinance it at that point, or keep it for another, another 5-year period, or possibly is at that point where we would roll it up into our third strategy, which our third exit strategy is called a roll up, right? It is where we bring all of our deals together, all of our properties together as one portfolio, and we sell it off as a large portfolio to a larger buyer who wants to add a significant amount of facilities at one time, rather than picking up one here, twosies here, that type of thing. So these are our 3 strategies. Hope that gives you kind of an indication of what you can do in self-storage, as well as what's available out there. Let me see, and let me just take that off here. If you do have questions or anything, feel free to let me know. Write in here and let me know what type of what are the things that you have questions about. A few people have asked about joining my team. We do have a mentoring program that we offer. It's really for people who are interested in joining my team and being part of my team on a deal that we have. If that's something that's of interest to you and you're getting your feet wet and learning how to do a self-storage deal, feel free to send me a DM and let me know. I'm happy to have a conversation. There are also some of you that are asking about like current deals. Like, hey, what about your current deals? Can I see what are you currently doing, and what are the type of returns I'm getting and things like that? So we do have a super exciting opportunity in the world of self-storage investing right now. If you're ready to jump on board, we're happy to show you that deal. It is a 506c, so it's for accredited investors only. steady cash flow. And if you're looking, look for this no further. So the best way to find out more information about that is just to write a comment below, or just to send me a direct message to learn more. Okay. And then that's it for tonight. In closing, I'd love for you guys to give me a thumbs up. Appreciate you guys being here. The best way to reach out to me is to send me a DM on Instagram. So reach out to me on Instagram. If it's my name is @PowellChi, just my name @PowellChi, POWELLCHEE. Just send me a DM on there, or email me at invest@radiantstorage.com. But if you do send me a DM and you're interested in setting up a call, or just want to just see the new deals, send me a DM, but use the word Radiant, RADIANT. That's our self-storage. So Radiant. And you can just say Radiant, and we'll shoot you off a link right away to check out our deals, as well as to set up a call. So thanks you, everybody. Reach out to me for more questions. I hope they can answer your questions about self-storage investing, and I will talk to you all soon. Take care. Bye.